The non-resident, does he have to open any bank account here in UAE?
No, they don't have to open a bank account when they apply for the pre-approval. They don't have to be here. They can.
Okay, really nice.
Yeah.
Okay. Actually, I wanted to add this into my slogans as well, that how the state is obsessed with making Dubai the most investable and the most livable city. How like flexible it is, like making for the known residents and the residents to buy properties here. What normally happens when people have started searching for a property and they have in their mind that they want to mortgage the property. So what are those common mistakes people make when they're applying for it? So my commitment to the channel is to bring on board the experts of the industry and to bring the best market insights possible. So today we have Santosh Rodrigues with us, and he is a mortgage consultant. I requested him to come on board and record this important podcast with us. So how are you, Santosh, today?
I'm good. Thanks for asking. How are you?
Perfect. So since we see that in the industry, there is the emerging trend that we see towards the mortgage as well. Initially, the 70% of the market was towards the cash buyers.
Correct.
Now the mortgage buyers are also coming in. So let's start with discussing that the basic things, that what exactly mortgage is.
So basically, mortgage is a loan which you can take from the bank to buy a property here in UAE. Okay, and the principal amount you need to pay back to the bank along with the interest charged by the bank, and the bank will keep the property as a collateral with them.
Let's take a case study. Like suppose that I am a resident, I live in Dubai and I want to buy my first property, or if I want to invest in a property. So what is the basic criteria that I have to undergo to get a mortgage approval from the bank, or how would you help me with this?
So the basic requirement would be you should have a 10,000 salary if you're a salaried, and the bank will give the mortgage up to 25 years. That is the max, up to the age of 65 or 70. For self-employed, there are two criteria. One is a full doc, wherein length of business should be more than 2 years. You should be having the audited financials, VAT return should be there, and your turnover really good. But it depends on the banks to back. Wherein there is one more policy wherein it is called low doc. So in low doc, the bank will give up to 65% only considering your personal bank statements.
Right.
So LTV will be loan to value. So if it is a 1 million property, the bank will give 65%. That means 50,000 with the minimum bank statements. So this is a better option for the people who doesn't want to give the company statements.
In terms of documentation, what is the requirement of the bank or the mortgage company?
Okay, to get a pre-approval, right? Yeah. You should have 6 months bank statement, 6 month pay slips, then salary certificate, visa, Emirates ID, and passport. That's it. And if you're self-employed, again it depends. So we can do it on your personal bank statement for 6 months, then trade license, MOA if it is there, then visa, Emirates ID, and passport.
Perfect.
That's it.
Perfect. Okay, let's talk about another case study. If I'm a non-resident, and for example, if I live in UK, I'm from London, and I'm a self-employed man, or if I'm like a salaried person, so what would be the criteria, and to what extent can I get a mortgage from the bank?
For non-resident salaried, if they have a salary worth of 15,000 equivalent to AED post-tax, then they can apply for the mortgage. And if they're self-employed, we can do it on a personal bank statements for 6 months, but they need to maintain a balance of 25,000 per month. Then they can apply for the mortgage as well.
Okay, to what extent? The 60%, 65 you mentioned.
Yeah, but the bank will give up to only 50 to 65%. The LTV will be 50 to 65% of the property.
For that, the non-resident, does he have to open any bank account here in UAE?
No, they don't have to open a bank account when they apply for the pre-approval. They don't have to be here. They can.
Okay, really nice.
They can apply for the pre-approval by staying in their own country. But once the mortgage process starts, when the banks issues the final offer letter, then they have to come here, open a bank account, and sign the final offer letter. That time they have to be here.
Okay, perfect. I cannot stress enough on this point, that actually I wanted to add this into my slogans as well, that how the state is obsessed with making Dubai the most investable and the most livable city. How like flexible it is, like making for the known residents and the residents to buy properties here. What normally happens when people have started searching for a property and they have in their mind that they want to mortgage the property. So what are those common mistakes people make when they're applying for it?
The common mistakes what people do is they'll look for the property first, then they'll come for the pre-approval.
Yeah, exactly. They hunt for the exactly.
Yeah, and second thing, what they do is they ask about the mortgage questions with the agent or with their family members.
Yeah.
So the possibility is, in mortgages, what happens is usually the banks keep on changing the policies and everything.
Yeah.
So the policy or the rate of interest, what was there a few months back, it wouldn't be the same now, right?
Exactly.
So the agent might be having outdated information, and if he gives to the client, then client could make a wrong decision, right? He could take a
Indeed.
wrong
Yeah.
option. So
Okay, so getting a pre-approval upfront is always the better option.
and second, should not take the advice from your agents or from the family members.
Yeah, the cousins.
Or whoever has bought the property long back. And
Yeah.
third option would be, it's always better to consult a mortgage consultant first before you start searching for the properties. Once you structure your finances, once you know how much you can borrow from the bank, because we know how to run the finances, right? How to run the calculations. So we can suggest the client, if there are so many liabilities, we can give them the idea where they can reduce it, how they can do it, so that they are eligible for the amount what they're looking for. So these things we can do it. Once we have done everything, okay, once we have structured the finances, then it's better they go for the property search. So it will help them to find a better property or the right property. So third point would be meet a mortgage expert and work on your finances, construct a finance, find your eligibility, then start.
Yeah,
searching for
I'm
the
glad you
property.
brought this up. This happens, like people do not understand their finances and they just right away apply for the mortgage, or
Correct.
they plan to invest in a property, so they end up.
Yeah. Fourth point would be considering 20% as a down payment. Actually, that is not true. It's better to keep 27%. 27% in the sense 20% for the down payment, because 80% the
And the
bank will
7%
finance.
extra one?
Yeah, the 7% will be DLD, broker fee, and other
Okay,
charges
yeah,
like
makes
bank
sense.
processing fees, valuation fee, mortgage registration charges. So it's
Okay.
always better to keep 27% upfront ready.
Okay, this part was for the ready property, I understand.
Correct.
Like, do you mortgage the off plan as well?
We do actually. Again, it depends on the developer. So there are some criteria. Once you met those criteria, then only you can apply for the off-plan mortgage.
Is it necessary that it has to be a big developer, or like
Yeah, it
can we
is.
go for the private? Like I've heard that it is only allowed to mortgage a property with the government developer. Is it something of this sort?
Not government developers exactly. So how it goes is, so there are some criteria, 3 criteria. So first, the payment should be done 50%.
Okay.
Second, the project has to be completed 50% as per the
Okay.
DLD
Okay.
app. Third point would be the developer has to be listed with the bank. So if you're a buyer who is planning to invest in off-plan, considering you will take a mortgage once that 50% is done. So it's always better to find out whether that developer is listed with the bank or not.
Okay, makes sense. Perfect. Yeah, but there is a chance to mortgage a
There is
off-plan
a
property.
chance, yeah.
And this is really amazing that when you see outside Dubai, there is no chance of mortgaging an off-plan property anywhere else. So, can a non-resident take a mortgage on off-plan property?
So the bank will finance the off-plan project only for the residents. So non-residents cannot apply for the
Okay,
off-plan
they can
projects.
apply only for the ready properties.
Yeah, they can apply only for the ready properties.
Okay, perfect. What if there are multiple partners, and for example, an husband and wife, or the friends, or the family relatives, or the blood relatives, can they get a mortgage in partnership?
Yeah, they can get as a co-applicant or a co-borrower. They can consider both the incomes and they can take the mortgage. But the important part is to find out the relationship first, and you have to make sure that that relationship is predetermined by the bank.
Okay.
So husband and wife is fine, and the blood relatives is fine. But not all the banks will allow you all the blood relatives, and friends cannot take the mortgage together.
Okay, perfect.
So it should be blood relatives.
All right, understandable. I think we have made it pretty clear now that we have just given out the general information that how somebody can apply for a mortgage facility, whether he's a resident or a non-resident. I think it's pretty clear now. Okay, in the next episode, we would be discussing about that how investors can leverage these facilities to build their real estate portfolios. So till then, stay tuned. Thank you so much for this amazing information,
Yes.
Santosh. So see you soon again.
See you soon, man.